Well, after yesterday's video about the 3% Robinhood savings account, I had a lot of people asking me questions about Robinhood. How is this company making money? How can they give away all these free products? What game is this company playing? And that's a very natural question for my audience to ask because you guys are very focused on business, on being investors, and so you're always thinking like there's got to be something in it for the other guy. How are they making money off this? It just doesn't make sense. How can they give away all these free things and do all these free services and not make money? It just is not adding up, right? So what I want to do today is I want to go fully into detail about how Robinhood makes money and the true game that Robinhood is playing that I don't think most people understand. So I hope you guys really enjoy this. Hit a thumbs up if you do. Let's get into this. So first off, as you guys found out yesterday, Robinhood is now announcing that they're going to do basically a checking type savings account that is basically in a brokerage account that you can make 3% on your money up to $75,000 from what I've read so far, which is absolutely ridiculous, okay? No bank out there is offering 3% on basically just holding money in a checking or savings account. That is really, really unbelievably high, okay? So people are like, how can they pull something like that off? That's ridiculous. Imagine, hundreds of thousands or millions of customers, or maybe even tens of millions of customers that have their money just, compounding and it's paid out each day. It's like, well, wait a minute. And then also people know Robinhood for the fact that they do free trades. Most companies, most brokerage houses, charge commissions for the trades. Robinhood, on the other hand, basically does commission-free trades. And they're like, okay, how's everybody else charging for this? And Robinhood's doing it for free. Even options trading, okay? Options trading, they even do commission-free, which is unbelievable for trading options, all right? So you're having all this come out and you're like, well, how is this company making money? This just doesn't make sense. Number one, they have commission-free stock trades. Everyone else in the industry charges at least probably around $5 to $10 every time you buy or sell a stock, all right? And here's Robinhood basically doing commission-free trades. Number two, they do commission-free options trades. Almost everybody else in the industry basically charges $5 to $15 every time you do an options trade. So the fact that they can do commission-free options trades, like what is going on? And number three, this is the biggest one, okay? Now you can hold money in an account and make 3% on that, and the interest is paid out daily. Everybody else is as far as holding money in an account gives you maybe 0.01% to maybe 2%, and the 2% is mostly online banks and whatnot. So with all this being told, they've got to be making money somehow, some way, because this is a lot of money they're basically just giving away for free. That they need people to run this, they need systems to run all this stuff, and they're doing it all for free, and they even pay out people, right? And if you sign up for Robinhood, you get a free stock. Sometimes that stock can be $5, $10, $20, sometimes even more than that. And it's like this just doesn't make sense, right? So let's start getting into this, guys. The first way Robinhood makes money is on margin. Now, you guys know I don't ever suggest you go on margin. I don't matter how smart you think you are. In my personal opinion, I'm not a fan of margin accounts. It is good sometimes if you want to get in and out of position quickly. But as far as margin accounts, it's basically just borrowing money you don't have to invest more money. So Robinhood has what's called a Robinhood Gold account, okay? Which is a premium margin account in their vision of how the next generation of experienced investors will interact with the stock market, all right? Now, they basically make money by charging you depending on how much you actually want to margin out, all right? So you can have plans that go from anywhere around $6, $10 range, all the way up to around $200 per month you would basically pay to use their margin services. So if you have a margin account, that is one way that Robinhood can actually monetize you and make money off you. Almost every brokerage out there has margin accounts, so I can't get on Robinhood for having it. Just know personally, like for 99%, but basically everybody, margin just doesn't make sense, guys. It's just too risky, especially if you're using that margin account to basically take out debt to invest. Like I said, I don't care how smart you are. I don't care how undervalued you think a stock is. Believe me, stocks can go lower, and it's one thing if you're putting in your own money that you actually have toward a stock. It's another when you have to pay account fees on that money, and then it just continues to go down, or you have to pay interest on that money, and it continues to go down, and then all of a sudden you have margin calls come and you get forced to sell shares at really bad prices, guys. So personally, not a fan of margin, but that is one of the ways Robinhood makes money. Another big way Robinhood makes money, I've heard about this many times, but I finally got to read a really good article. It was on Investopedia about it. So Robinhood claims that they receive very little income for the payment of order flow, according to a statement issued by the co-CEO back in October. So according to the co-CEO, Robinhood earns around 0.8 0.0026 in rebates per dollar traded, or about 2.6 cents per $100 traded. In September of 2018, Logan Kane, a contributor to Seeking Alpha, stated that Robinhood's payment for order flow generated 10 times the revenue as other brokers receive from market makers for the same volume, which is insane, okay? Bloomberg has analyzed Robinhood's reports to the SEC and calculates that Robinhood generates about half of its income from payment for order flow. Robinhood's lack of transparency on this issue is troubling. Beyond that, payment for order flow is slowly being regulated out of existence, so a brokerage that depends on generating income by selling order flow to market makers will find itself in a trouble within 5 years, okay? So that's very interesting. They're basically making money on all the orders that are placed on the backside. So 2.6 cents essentially per $100 traded. Now, obviously, if you start adding up the numbers, the more and more people that are trading, the more and more money you make, right? So it's a good thing in the end for Robinhood. The more and more dollar amounts that's traded out there, the more and more money Robinhood can make, all right? Now, to be honest, those are pretty much the only two significant ways Robinhood as of today makes money. But what you got to understand is Robinhood is playing this game so much different than the other brokerage houses are playing this game, or financial institutions in general, okay? Robinhood doesn't have to make money right now, and actually they can fund their businesses, so they can fund their losses because they're just able to raise money like that, okay? So about 2 years ago, Robinhood raised around $110 million, and that's when their valuation got to about $1.3 billion. So basically they just got $110 million that they could spend on customer acquisition and things like that, right? And then just back in May, so what, 6 months ago, 7 months ago, something like that, Robinhood raised $363 million, and that put their valuation now at $5.6 billion. So basically $360 million just laying around that they can basically acquire customers and do things like that. This is a very, very, very different business model than what the other guys are running, okay? Companies like E-Trade, it is not like that, all right? Companies like JP Morgan Chase, they're playing a different game, right? They got to make profits. They got to pay, executives hefty sums of money. Wells Fargo, same exact deal. They're companies that are playing a different business model, while Robinhood just gets all this funding from VC land, right? And they can funnel that into their business to grow basically customers and customers and customers and customers, regardless if they make money off them or not in the short term. If we look at E-Trade, right? E-Trade this year, they brought in around $900 million in net income this year alone, okay? That's a substantial amount of money. If we look at JP Morgan Chase, just in the past 3 quarters, JP Morgan Chase has over $25 billion in net income in the past 9 months, guys, otherwise known as 3 quarters. Like, that is ridiculous, okay? JP Morgan's CEO has paid out $28 million in compensation, all right? If we look at the average banking in the financial space, the CEO pay, it's around over $12 million. I can almost guarantee you that the high-ranking executives at Robinhood, especially the CEO and the co-CEO, I bet you any money those guys are hardly paying themselves, if paying themselves at all. They're mainly just caring about where that valuation goes over time, because they have major ownership, obviously, in Robinhood app. So they want this company to have a $100 billion valuation on it someday, a $500 billion valuation on it someday, so they don't care to pay themselves $28 million a year or $12 million a year. So Robinhood's playing so much of a different game than what everybody else is playing. Everybody else is playing the net income game, though. Let's pay our CEO $12 million, $20 million a year type game, okay? They're playing a different game, and that's what everybody's asking themselves. What game is Robinhood playing? And I'll tell you exactly what game they're playing. They're playing the Facebook game, okay? So Facebook for years and years didn't make any money off its users. Facebook was like, let's just get as many users through the door as possible. Basically, all those photos and your account setup and all that type of stuff, that all costs it Facebook money, okay? And so Facebook took massive losses for a long, long time. How those losses were funded? Those losses were funded because VCs put more and more money into Facebook to get it through all those short-term, those first, 5-10 years of Facebook actually losing money because it wasn't making any money from its users and there weren't enough advertisers on the platform, all right? And eventually what ended up happening was Facebook started to get into the green, and then they started getting into the real green, and Facebook became one of the biggest companies in the history of mankind, okay? Because they got massive amounts of users on their platform, and so it's almost the idea of you get massive amounts of people on your platform, right, to use your product or your service. you'll monetize them down the end, okay? You'll monetize them down the road as long as it's a service that they continue to use for months and months in the future, years and years, or maybe even decades to go into the future. So Robinhood's looking at it as if we can get the millennial generation in now, imagine how much money we can make off these guys on products and services 5 years from now, 10 years from now, 20 years from now. If we have 50 million customers, 100 million customers, imagine how much money we'll be able to make down the road. That's the game Robinhood's playing. They're just playing the game of VCs are funding them to take losses in the short term so they can acquire as many customers as possible. When you come out with something like a 3% savings and checkings account, everybody out there is like, oh my gosh, I gotta sign up for Robinhood now because that's ridiculous, right? So that's something you just gotta understand. They do have a few ways of monetizing right now, but they're just playing a different game than these guys, at least in the short term, and probably will continue to for the next few years. And the thing that'll be interesting is if funding dries up, we go into a recession or something, funding dries up, how much will Robinhood start charging its customers? If they'll charge anything, will VC still back them? I can tell you, if you still have the customer inflow, even in bad times, VCs will tend to fund you still. Facebook, for instance, during the Great Recession, they still didn't have trouble getting money, okay? People looked at Facebook and they're like, this company's still gonna make a lot of money in the long term. Robinhood, same exact deal. If we went into a recession or something, as long as they're still acquiring tons and tons of customers, VCs will look at that and still fund the business like that, guys. That's just how it is. So anyways, I hope you guys enjoyed this. I hope you learned a bit about the Robinhood app and how they actually make money. And the fact is, they're playing a different game as far as money goes than everybody else, okay? So I hope you guys enjoyed this. Hit a thumbs up if you enjoyed this today. Thank you for watching and have a great day.